AQA Advanced Level Business, Questions and Answers 3.2, Management, Leadership and Decision Making. Differentiate between management and leadership is a good place to start. Well, management is about instructing people and organising resources to get the job done, whereas leadership is about motivating and inspiring people to give of their best. Identify 5 tasks of management. Planning is looking ahead and preparing. Organising is setting the structure of the business. Commanding is issuing instructions. Coordinating is getting the business resources working together. Controlling is steering the business towards its objectives. List and explain 5 different types of management style. Authoritarian. Here, the manager makes a decision and then enforces it with little or no discussion. Just says, this is what we're going to do. But paternalistic is father-like. It's a softer form of authoritarian. The manager has greater concern for employees, often found in family businesses. Democratic, the boss encourages group participation, delegates and listens to opinions. Laissez-faire, here the boss equips their staff with the necessary resources, but then leaves them to get on with the job. Finally, situational, here a manager adapts his or her style according to the circumstances. This is generally regarded as the most efficient style of management. Identify 3 internal factors that might influence management styles. Type of task, whether it is urgent or not. So if things need to be done very quickly, an authoritarian style might be more appropriate. Types of workers, whether they are professional or unskilled, and how they're behaving. And also the method of production, whether it's team or whether it's flow production. All these 3 are likely to influence the style of management that the boss adopts. Identify 7 external factors that would influence management decisions. Well, again, we have this pastel: political, economic, social, technological, and environmental and legal influences. More of these later. Explain the diagram below. Right, this is the Tannenbaum-Schmidt continuum. It is a graphic which depicts the movement from left to right, from authoritarian management to democratic management. Reliance on authority declines as individual freedom and responsibility increases. Explain the diagram. This is the Blake-Mouton grid, commonly called Blake's grid. It shows the styles of management the boss may adopt. There is a trade-off between concern for people and concern for production. Top right is best, bottom left is worse. So team leaders with 9-9 are considered to be the best. The worst or impoverished management is going to be at 1-1. Most managers obviously are somewhere in the middle of that, just middle of the road managers. What are the stages of scientific decision taking? Well, first of all, we set objectives. We go out and collect the data. We then analyse the data. We then select the options. We then make a decision. We implement the decision, and then we review, and then we may loop back to number 1. Now, if you're in the 6th form at the moment, this is the process that you will go through in choosing your university. So you decide which university you want to do, what you want to go to, then you go and collect all the information, you analyse it, you select your 5 or 6 options, then you make the decision, You implement the decision, hopefully you get to your chosen university, but then also during the first year, you would review that decision, making certain that you've actually made the correct choice. What is intuition? Making decisions based on gut instinct or feelings or past experience. So it's complete opposite of scientific decision making, but nevertheless, many managers do prefer this method. What is the relationship between risk and reward? Generally, it's high risk, high reward, low risk, low reward. Generally, reward varies directly with risk. Why might managers have to consider opportunity cost? Now, opportunity cost is a thing that you give up to obtain something else, the next best alternative. The opportunity cost of buying a new lorry might be not being able to buy a new production machine. All businesses have limited resources and must make trade-offs. So opportunity cost, the foregone alternative. List 5 major influences on decision making. The mission of the business, where the business is heading, the objectives, which are going to get you to the overall destination, ethics, external environment, and any resource constraints that might be pertinent, for example, materials, labour, or capital. What is a decision tree? Well, here we have one. It's a diagram showing choices and outcomes weighted by probability. So in our example, a company has a choice of 2 actions which are mutually exclusive. In other words, they have to do one at the expense of the other. It can either retain its existing advertising program or develop a new one. If they retain the existing program, they believe that there is a 0.8 chance of being successful, and if so, it will generate profits of 50,000. However, if it is unsuccessful, there is a 0.2 chance of losing 50,000. If it chooses to develop a new program, the reward for success is 1.5 million, but there is only a 0.2 chance of success. If it fails, which is more likely at 0.8, there is a loss of 750,000. So we can see in the diagram here that this is all mapped out very nicely. We have an EMV value of 390,000 on the top, and the bottom EM value is £300,000 loss. So we have a decision there to actually go with the retaining the existing program. The calculations are as follows. So the existing project success is 500,000 times 0.8, which will give us 400,000. Failure is 50,000 times 0.2, which gives us a loss of 10,000. So the EMV turns out to be 390,000. The new program success is 1.5 million times 0.2, which is 300,000, but the failure is 0.8 times 750,000, which gives us 600,000 loss. So that makes it a loss of 300,000. So clearly the conclusion is not to develop the new program. So if on a large number of occasions the decision was made to develop the new program, the company would on average would lose 300,000 each time. So that's the maths behind the decision tree, but let's look at some positive advantages of using one. Well, it encourages a firm to consider all the possible options available and all the possible chance outcomes. It requires quantification, which may encourage firms to conduct more market research than would otherwise been the case. It can provide a useful focal point for debate in a management meeting. It also allows the manager to identify not only the outcome with the highest weighted average, but also alternatives that are less profitable, but also less risky. Now let's look at some explaining some disadvantages about decision trees. Well, first of all, business decisions tend to have an infinite number of shades of grey. So the decision tree may be an oversimplification. Putting a value on the probabilities is difficult, if not impossible. Who can say whether the chance of success for a new product is 0.4 or 0.5? It is only as accurate as the information that is provided. And then finally, has the creator of the tree any reason to prefer one result to others? If so, then bias may creep into the technique. So I feel in general, the main advantage of it is the decision tree is just actually mapping it out. You can put this on a flip chart and you can have a lengthy discussion about it in management meetings. Define the term stakeholder. A stakeholder is simply anyone who is directly affected by the activities of a business. Identifying three internal stakeholders and state their objectives might be and why they might clash with one another. Well, there is a potential conflict between owners and workers, as an increase in wages means an increase in costs and a decrease in profits. Managers, the third internal stakeholder, may want to grow the business by reinvesting profits, whereas owners may want large dividends. Or managers might want plush headquarters and private jets at the expense of dividends. Identify 5 external stakeholders and explain their interest in the business. Well, first one is customers. They will want reasonable prices, quality goods, and a good customer experience. Suppliers want to receive large orders at fair prices and to get paid on time. Banks want to have their loans or overdrafts be paid back with interest on time. Number 4, the government, which is a huge stakeholder in all businesses. This is because it wants receipts from corporation tax, income tax, national insurance, and VAT. Finally, number 5, we have the community, and that benefits from businesses because the business supplies the workers with wages, and those wages are then spent in restaurants and in supermarkets in the local area. Explain the diagram. This is a power interest matrix and offers general advice on how management deals with stakeholders. It shows a trade-off between power and involvement in the business, and therefore which stakeholders to take notice of and which ones that may be safely ignored. This brings us to the 3.2 assessment. This is the answer sheet. If you have this in front of you, then great. If not, then just jot numbers down from 1 to 15 and then just write down the correct option as we go through. So, question 1. Statement 1. Management is mostly about planning, organising and controlling. Statement 2. Leadership is about motivating and inspiring people. So read statements 1 and 2 again and then select the correct option. Question 2. The 5 functions of management are A. Communicating, negotiating, arguing, working and advising. B. Motivating, disciplining, recruiting, dismissing and negotiating. C. Planning, organising, commanding, coordinating and control. D. Reviewing, monitoring, negotiating, calculating and reporting. Question 3. Which of one of these is not regarded as a management style? A. Autocratic. B. Democratic. C. Is situational. Or D. Maternal. Question 4. What does the acronym PESTEL stand for? Is it A. Party, Education, Society, Trade, E-Business and Limited? B. political, economic, sellers, technological, environmental and legal. C, political, economic, social, technological, environmental and legal. Or finally, D, private, e-business, sellers, trade-offs, environmental and loyalty. Question 5. The Tannenbaum-Schmidt continuum shows how management styles may move from A, democratic to paternalistic, democratic to situational, autocratic to laissez-faire, or D, paternalistic to autocratic. Question 6. On Blake's grid, Question 6. On Blake's grid, the axes are A, concern for people and concern for production, B, autocratic and democratic, C, concern for machinery and concern for labour, or D, leadership and management. Question 7. On Blake's grid, great managers will be at A, 5-5, B, 9-9, C, 9-1, or D, 0-0. Question 8. Which of the following are internal stakeholders? A, suppliers, B, employees, C, lenders, or D, government? Question 9. Opportunity cost may be defined as A, price minus variable cost, B, total revenue minus total cost, C, the foregone alternative, or D, a large loss. Question 10. The sequence of scientific decision taking is A, review, establish objective, collect data, analyse, options, choose and implement. B, collect data, establish objective, analyse, choose, implement, review, options. C, analyse, establish objective, collect data, options, choose, review, implement. Or finally, D, establish objective, collect data, analyse, options, choose, implement and review. Question 11. Statement 1. Using a decision tree means management will make the correct decision. Statement 2. Decision trees weight the value of outcomes by their probability of occurring. Read statements 1 and 2 and select the correct option. Question 12. Alan is deciding whether to go to university. Following graduation, there is an 80% chance of earning 80k a year and a 20% chance of 40k a year. He has been offered a job starting immediately, paying 50k. What should he do? A, go because the EMV is 120,000. B, go because the EMV is 38,000. C, not go since the 50,000 is certain. Or D, go because the EMV is £22,000 more. Question 13. Statement 1. One advantage of using a decision tree is that it graphically displays the options and outcomes, so can be used in meetings. Statement 2. Since the probabilities are unlikely to be accurate, care must be taken not to base the decision on the tree alone. So read statements 1 and 2 again and then select the correct option. Question 14. Statement 1. Stakeholders are the owners of the company. Statement 2. Successful management will ignore all stakeholders. Read statements 1 and 2 and then select the correct option. Finally, question 15. Which of the following statements concerning stakeholders is untrue? A, this government has no financial interest in businesses. B, customers want equality products at a fair price. C, suppliers want large orders and to be paid on time. D, workers' wages and owners' profits are inversely related. So this is 3.2 multiple choice solutions. Just mark your work as I go through them. So 1 is A, 2 is C, 3 is D, 4 is C, 5 is D, 6 is A, 7 is A, 8 is B, 9 is C, 10 is D, 11 is C, 12 is D, 13 is A, 14 is D, 15 is A. Okay, hope you did very well on that. Next one up is 3.3, where we'll deal with marketing.